My name is Larissa Greene. I'm with Advanta IRA. We're going to talk today about investing in alternative assets with limited funds. I'm going to leave the question box open, so throughout the webinar, if anybody has any questions, please go ahead and feel free to type it into the question box. We'll get those questions answered as we go. I also did load the slides for you in the handout section. So if you look at your right-hand navigation, there's a section called handouts. You're going to see the slides loaded there as a PDF. So you're welcome to download those. And again, my name is Larissa Greene. I'm with Advanta IRA, and I'm going to be talking to you today about using a little bit of money to make investments. So now, whether that's you're starting with an annual contribution, you have a little bit of money left over from another transaction, maybe you have income from an investment that you want to put to work. How can you do that with a self-directed IRA? Because remember, with a self-directed IRA at Advanta, your money is not earning unless you're putting it to work. I have been Director of Education and part of the business development team at Advanta IRA for about 10 years now, and I started with Advanta in 2011. My contact information is here on the slide for you. If you have any specific questions, is something where you're looking at a personal scenario and you'd like to talk about it in more detail, please feel free to reach out to me. But like I said, as we go throughout the webinar, I'm going to be taking questions. Remember that today we're going to talk a little bit about the rules for self-directing, types of investments we see, but keep in mind that we don't provide investment, legal, or tax advice. Any information here is for informational purposes only, and we encourage you to reach out to your professional team, your accountant, your attorney, your investment advisor to assist you with any questions outside of our scope. And so if you have a question, you're not sure where that falls, please feel free to reach out and ask the question anyway. But ultimately, we will direct you if we can't answer that question, maybe to a member of your professional team, or we can refer you to professionals that have assisted our clients before. I know a lot of times when we talk about different investment strategies and the different rules involved for self-directing your retirement account, it sounds like a lot of information, and sometimes people get overwhelmed. So I always like to kind of give you the key points or the key takeaways from each webinar so that you can leave and say, okay, well, I get the gist of it. I can ask Larissa any questions in the future. So you don't need hundreds of thousands of dollars to self-direct your retirement account. That's number one. Today, that is what we're talking about, how to take those smaller amounts of cash and put them to work so that they're earning as well. You choose the investment, so we don't sell anything at all. So remember I said, if it's sitting in cash, it's not going to earn unless you put it to work. So you choose the investment. We don't sell you anything, but we hold the account. And when you let us know what you want to invest in, we help you get it done in the name of the retirement account. And you can invest in a number of alternative investments with limited funds. So you're not going to be limited to, hey, this is our strategy for smaller balance accounts or smaller amounts of money left over. There are a lot of things we see clients do with smaller amounts of cash. So we're going to talk about that today. I see a question on how to download the PowerPoint. If you go to handout, you're going to see it loaded there, and then there's going to be an option in that box to download the file. So you can click on it, and then it should pop up the navigation for you to choose where you want to save that to. A little bit about Advanta. We've been in business for over 20 years now. Actually, this is our 21st year. And we handle qualified funds. So anything in a retirement account, as long as it can be self-directed, we can help you with that. We don't handle any personal cash at all, but we do handle different types of retirement accounts. And there's a few other accounts that are going to have tax advantages as well that we can help you with. And I'll talk to you about that in just a minute. We have over $2 billion in assets under management. We have 2 offices. We're in the Tampa Bay area of Florida, and then we're in the Atlanta area of Georgia. But we can actually help any client anywhere as long as they have a US-based retirement account. And so, if you work abroad, but you work for a US-based company, or you lived in the US at some point and have a 401k, those accounts can be self-directed because they're US-based. And so we can help you with that. And every client that we have has a dedicated account manager. That person is with them for the life of the account. And the benefit really there is just you have the opportunity to get to know the person that you're working and always reach out to them for all the needs based around your retirement accounts with us. And so if you have several accounts with us, maybe you have one, your spouse has one, your child has one, and you're self-directing those accounts, all of you will have the same account manager. And so you know who to reach out to for the investments that you'll be making. If you haven't heard of self-directed retirement accounts, that's just very simply because there's not a lot of companies out there like Advanta willing to help you with what we consider alternative investments. There are a lot of brokerage firms out there that have directed options, but those accounts really truly are accounts where they allow you to choose the investment and choose the amount you're investing, but it's all going to be market based and it's all assets that they sell to you. So remember that we don't have anything to sell. We provide a service. We hold the account, you find the investment, we help you get it done in the name of the retirement account. And so what we do is much different than your brokerage firm. And so we're really not competing with them. We're just filling the gap in the industry so that you can truly diversify your retirement savings. And there, like I said, there's not a lot of companies out there like Advanta that can do this. And so when you're looking at the total percentages, it's actually less than 4%. It says IRAs here, but it's all retirement accounts. So that would include like defined benefit plans and 401ks that are truly self-directed. A question popped up on the handout. If you look in your navigation, there's going to be an option for handouts. If you click on that and expand that window, essentially, you're going to see investing limited funds 1/23/2024. That's the handout there. Just click on that and then it'll give you the option to download. So I know I mentioned that there's other accounts that can be self-directed. So let's start here with traditional and Roth IRAs. Those are going to be the most common types of accounts that we hold. And those IRA accounts are going to be because people are rolling over from an old employer plan, typically to a traditional IRA, because those are both pre-tax accounts. People have established Roth IRAs, or maybe they converted money to a Roth IRA. And so those are the most common IRA accounts that we see. But if it ends in IRA, it can be self-directed. So that's going to include SEP IRAs, or simplified employee pensions as they're known as, where those are employer-based plans, as well as simple IRAs, also employer-based plans. Former employer plans, so once you cut ties with your company, you're no longer contributing, you're able to roll that money into an IRA to self-direct it. Solo 401k, so that's an employer-based plan that we help you establish if it's you, your spouse, and business partners as employees of the company only, and you're looking to save for retirement through your contributions, basically through that company, and also as the employee. I also have up here health savings accounts and education savings accounts, and these accounts, although not retirement accounts, they are tax advantaged. And so we can help you with these accounts and they can be self-directed. And the rules for self-directing them are going to be exactly the same as IRAs. There's a question about investing in ETFs and stocks in an IRA. You can make those investments, just simply not through us. We don't hold anything that would be considered publicly held or traded. Now, of course, there's going to be some investment trusts that are going to be considered private and some stock that's considered private. And yes, we can absolutely help you with those. But anything publicly traded, we can't do. There's a question that popped up here. What about having checkbook control of the IRA? That's a great question. We are going to talk a little bit about checkbook control, but if you have an LLC or a trust for checkbook control through your retirement account, then yes, that entity essentially can have a trading account. You just want to make sure that you properly structure that because it is a retirement account. Thank you for the question. Keep them coming. So investment options in a self-directed IRA. And now remember, we're going to talk specifically today about investing with limited funds. So how can you do that? You can invest in real estate options, and I will give you definitions and go into more detail in each of these cases as we go through the webinar. But we see real estate options, a good choice. And actually, we had a webinar with special guest Bill Cook last week. So if you're looking to learn more about real estate options, you can check out that webinar. Go to our YouTube channel and look for real estate options with Bill Cook, where he talks specifically about a few different examples of real life investments where he used real estate options not only to grow wealth, but also to help people that are in real estate situations that they need assistance with. We see tax lien investing all the time, and we'll talk about that in more detail and different strategies people use, and that's where we're going to talk a little bit about checkbook control as well. Private lending, and I know a lot of times when we think about a mortgage or a deed of trust, we're really thinking about something more conventional, right? Like a 30-year, $200,000, $300,000 loan. But in the case of private lending, it does not have to be a conventional mortgage. It can be something where you're using a little bit of funds to make an investment. We do see people invest in cryptocurrency, and there's a few strategies with that as well. Foreign currency or Forex exchange is something we do see, and you don't need a ton of money to do those investments. Precious metals, of course, gold and silver bars and coins, platinum, palladium, those are all options in your account. And then you can partner funds to make investments. So if you had the opportunity to partner, say, with your spouse's IRA, but they have 10,000 and you have 100,000, it doesn't have to be 50-50. The percentage of ownership is going to be directly related to the amount of money each IRA account brings to the table. I had a question pop up about having precious metals and using that as collateral for real estate purchasing through a self-directed IRA account. Unfortunately, that won't work. I'm happy to talk through that strategy with you if you want to send me an email or give me a call after the webinar, but no, you can't use precious metals that you own personally as collateral to purchase real estate through your IRA account. A question popped up on Forex or foreign currency. Trading and buying Forex used to be a brand, and it's kind of used as a blanket term for foreign currency trading and buying. And so we do see people establish an account with us because the platforms that do the trading and purchasing of foreign currency are not IRA accounts. So what you would do is open an IRA account with us, and then we help you get the profile for the trading platform that you'd like to use in the name of the IRA, and then we fund that profile with IRA funds so that the IRA is actually making those investments. So some things to keep in mind, that there are rules when you're looking at a self-directed retirement account. A lot of times people will come to us and say, I'd like to buy a vacation home or a second home. I need money for a down payment to buy a property that I'm going to live in. And unfortunately, those are prohibited transactions. They're not going to be allowed because they're not considered investments for the retirement account. And so the IRS does have some specific rules here, and they require that you follow along with those rules. Now, as far as prohibited investments go, there is not a ton of things that you can't do. And so prohibited investments just include life insurance and collectibles. And I know in some employer-based plans, some insurance investments are allowed. Those are going to be very specific. And so just so you're aware, in an IRA, life insurance is not permitted. And even in a 401k or an employer-based plan, that's a very specific structure you're talking about. Some coins are allowed if their value is based on what the metal is trading at. So here we're talking specifically about collectibles. So you would not be allowed to invest in something that would be considered collectible, rare, or antique. Those would not be allowed in your IRA account. But if you're buying something that is the value is very specifically based on what the metal is trading at, then that is allowed. And actually the IRS does provide a list of information and coins that are allowed on their website, so you can always check that out. Now, what would be considered a prohibited transaction? That would be a transaction between the plan and anyone considered a disqualified person. So we're going to talk a little bit about disqualified persons on the next slide, but keep in mind that it's essentially going to be you and your family up and down your lineal tree. And then included in that is going to be spouses and business entities of those. Usually what I say is if this is an investment for investment purposes, you're not typically including family in those investments. Now you can partner with whomever you like, and we're going to talk about that as well, but just know that there are people and entities that you're prohibited from engaging in transactions with. And then although this does not make a transaction prohibited, sometimes tax does apply to your tax deferred or tax-free account. And so when we're talking about unrelated business income tax, UBIT, UDFI, sometimes also those terms are used. And we're talking about strategies that you're using within the IRA account. And although it's not going to make it prohibited, this tax may apply, even if it's a Roth IRA, because that's a question I get a lot. Well, it's a Roth IRA, so it shouldn't matter. Unfortunately, this tax applies because either A, you're using financing to purchase or rehab a real estate investment. So if you're buying real estate, if you're investing into a syndication that's buying real estate, and there is going to be debt on that property, the debt will trigger unrelated business income tax. And this will apply to IRAs. The good news is if you have a solo 401k or an employer-based plan, and it's going to remain in that structure with Advanta, so not rolling over to an IRA, but staying as a 401k, unrelated business income tax does not apply to debt financed real estate to the 401k, but it does apply to all IRAs, tax deferred or tax free. The other time unrelated debt financing, or excuse me, the other time unrelated business income tax applies is when business income is being returned to the retirement account. And this applies to 401ks as well as IRAs. And so if you have a passive investment, something you're receiving interest income, dividends, passive rent, then that typically is not going to trigger this tax. But if you're receiving business income back to the IRA, then you might be facing unrelated business income tax for that retirement account. I had another question pop up on foreign currency exchange. Could I be the one to trade it? I do feel like that would be okay for you to be the one using the trading account. If you think about when you look at your retirement account with a brokerage firm, you might be buying and selling stock. And so it's probably something similar there. But I would always suggest talking to your accountant or your attorney to get their final decision on something like that. So again, self-directed IRA rules, who is considered disqualified. So here you can see on our table here, you have the IRA holder, their spouse, their parents, their grandparents, their children, their grandchildren, and then any spouses or business entities of those. So for example, if my son owns a lawn care company and he is working in the neighborhood where my IRA owned real estate is, and he says, hey, mom, I'll go out and cut that lawn for you and I'll charge you the regular rate and it'll be all fair market value, that would still be prohibited. Even if I wasn't paying him and he was just going out there to do me a favor, that would still be prohibited. So a transaction, furnishing goods or services, all of this would be considered prohibited. You can hire any lawn man you like as long as they're not considered related to you up and down your lineal tree and including spouses and business entities of those. So who is not on this graphic? Brothers, sisters, aunts, uncles, cousins, those people are not considered disqualified. However, you want to deal with those individuals and their businesses at an arm's length or considering them as an unrelated third party, meaning that everything is at fair market value. The investment is for investment purposes. And ultimately, we do not make that determination, but we would strongly urge you to talk to your CPA, accountant, or attorney to make sure that the investment that you're doing is structured properly. So transaction basics. And again, if you have any questions, just type them into the chat box. Transactions are investments are titled in the name of the IRA from start to finish. So if you're buying real estate, for example, or if you're investing into a real estate option, then that paperwork from start to finish would be Advanta IRA for benefit of John Doe's IRA number 1, 2, 3, 4, 5, 6, 7, and everything from contract to close would be in that name. This investment is not yours, it is your IRA account. And so although it is your IRA account, this is a separate entity from you. And the way that we show this, the IRS that this investment is of the retirement account is by this special titling. Advanta IRA doesn't sell any investments at all. We hold the account, you find the investment, we help you get it done in the name of the IRA. So if you come to me and say, Larissa, I have a project that I'm working on and I need some borrowers, how do I get in touch with your clients? This is a question I get all the time. Unfortunately, we do not put borrowers and lenders together. This is very strict for compliance purposes. Remember that we remain as your third-party administrator, third party being the key there. We are unrelated to any investments that you're making. We simply help you get them done in the name of the retirement account. And then all investment paperwork is given to Advanta prior to the investment being made, and then we have you as the account holder approve it, basically signing as the account holder saying that I want to make this investment and these are all the terms that I am agreeing to. And that's very important because we're not reviewing your investment documents for any kind of correctness based on the deal that you're making. We're not looking for a certain rate of return or anything like that. All we're doing is reviewing the investment paperwork to make sure your IRA is properly titled as the investor. We look for you to approve it, and then with your permission, we send the money out on your behalf. Your IRA pays all of the expenses for the investment and receives all of the income. And this is very important. So when we talk about real estate options coming up here and we say, okay, well, if you give somebody $10,000 for the option or right to buy their home for some specific amount 10 years from now, if the IRA does not have that money in it, and you can't make up the difference by an annual contribution, which you may not be able to depending on how long you've been contributing or the type of account, then you must have another strategy, because you can't just lump fund an IRA with more than the annual contribution will allow. So the IRA pays all of the expenses for the investment, and it also receives all of the income. Your strategy is your own, and we take your direction when it comes to your account. So if there's a bill to pay, if there is some income being received, we're going to reach out to you if we receive any of this directly to say, please direct us. What is this for? And we take your guidance on that. And IRAs can partner even with people considered prohibited. So anybody that was considered prohibited on that list that we talked about, you can still partner with them. It just needs to be structured very in a certain manner that is specific to a partnering structure, and we'll talk about that. So real estate in an IRA with limited funds, let's get started. So tax liens. Tax liens are something that we do see often in a retirement account. And depending on the state you're in, there's going to be a few different things that pop up. So the first thing is, are you in a tax deed state or in a tax lien state? And I am not an expert in tax liens and deeds, but I'm going to tell you a little bit about it. If I get anything wrong, please feel free to reach out to me and let me know. But in a tax lien state, you're going to bid on the lien. And when that lien comes due, depending on the number of years that your state allows, you have the opportunity to send the property to auction so that if your lien has not been paid off, you can get paid off, but that does not award you the property. You would have to bid on it just like everybody else, but it does, once the property is purchased, it does get your lien paid off. So in a tax lien state, you don't automatically get awarded the property if the lien goes unpaid. And I know specifically for Florida, that the minimum is 2 years. So there is 2 liens issued on that property before it goes to auction. And then one of the lien holders has to actually request that it go to auction in order to get their money back on those liens. And I know Georgia is a tax deed state. So when you purchase the lien, if the lien is not paid, and I think it's actually as short as a year, then you are awarded the property. So it just depends on where you're at and what your state has as far as the laws for tax liens and deeds. Now, all of that being said, here in our area, tax lien season is around May, June. And so in May and June, we see a lot of people reaching out to us. I need to make a deposit with the county. I need to get my money over there, so I'm ready for the auction. So typically the way that it would work is you would reach out to the county that you want to invest in liens with and find out what their process is. Do they have an online portal? Do we have to mail a check? Can we ACH money over to them in order to put a deposit into your account so that you're ready to bid on liens when that day comes? And then once you're awarded liens, you would let us know, and we would fund that the remainder of the or balance of that investment with the county on your behalf. There are different ways to do this. So at Advanta, each county is going to be considered a separate investment as far as fees are concerned. And then we work with you based on the information you give us on how the county operates for when the deposit needs to be made and when payment needs to be made in full. Sometimes people use checkbook control for these types of investments because it makes it a little easier because they can literally fund when they need to and they receive the income. Checkbook control is a specific strategy where somebody is using an LLC or a trust. They set up that entity specifically for the retirement account, so that entity is established so that the retirement account can own it. And then from there, we fund that entity's checking account, therefore giving the IRA holder checkbook control. In the case of an LLC, the IRA holder could name themselves as the manager. However, if you use a trust, the IRS rules prohibit you from being trustee of that trust. So you have to hire a non-disqualified third party to act in that role. But essentially, we fund that entity, and now that entity can work with the county directly to make the deposit, pay off the balance of the investments made, receive the income as liens that paid back. And so that might be a strategy you use, and you do save on fees. Now, of course, there's a lot of pros to that, but there's also cons to that strategy as well. One, of course, if you're unfamiliar with the rules for self-directing, you have lack of oversight from us as your third party when you literally have checkbook in hand. So checkbook in hand makes it a lot easier to engage in prohibited transactions. You do not want to fund your LLC or trust bank account with your annual contributions. You first have to go through Advanta because we're the annual record keeper for that account. You want to make sure that you don't accidentally write a check for something personal or use a personal checking account accidentally because you get the two checking accounts confused, for example. So there's, pros to this strategy, but there's also cons. If you're looking at this, we actually have a whole webinar on checkbook control where you can check that out and see if it makes sense for you. And again, check in with your accountant or attorney to see if this strategy will work for you. So I don't see any questions in the chat box. I'm going to move on to real estate options. So a real estate option is investing into the right to buy a property at an agreed amount at a later date with a fee paid to the property owner to obtain this right. So essentially, if let's say I met a property owner and they said, I really need a roof, but I don't have the property for the roof, so we're probably gonna have to sell the property. But I said, don't sell the property. I'll help you get a roof, but I want the right to buy instead of a loan, I want the right to buy the property for today's fair market value 10 years from now. And let's say that the property owner agrees. Then I give them the money for the roof. They give me back the option to buy or the right to buy at that 10-year mark. And we stipulate specific terms. We agree. And then the option is in the name of the retirement account. So the option goes basically into the IRA. And then when that time comes to purchase the property, if the IRA has the money, it can purchase the property directly. If it doesn't have the money, it can sell the option or maybe renegotiate with the sellers to extend the option. There's a lot of different things that you can do with that option, but essentially you have growth in the option through the real estate transaction. You should check with an attorney to find out more ways to secure options. There are ways to secure options in the public record. And so just talk to a professional about that. And again, I have a webinar from last week with Bill Cook where he talks about options, paperwork he uses, and he is also offering a class coming up shortly, so you can get more information on that as well. So private lending, I think most of the time when somebody hears the word mortgage, they're thinking about their 30-year conventional mortgage on their property. Well, when we talk about private lending at Advanta, we're talking about all different ways that money is lent through a retirement account. It can be a couple $1,000s. It can be in first position, second position, third position. We do not assess the investment. So if you're comfortable with that investment, then we'll help you get it done in the name of the retirement account. So let's say that somebody had a first position mortgage already and they were looking for a second position of $5,000 to finish their rehab, and they told you about the equity in the property, what the first position lien is, and you felt comfortable with that, then we would help you make that investment in the name of the retirement account in second position in my example for just that $5,000. And then once it gets repaid, it's all going to go back to the retirement account. So there's a good example of a reason somebody would just need a small loan on a property for a short amount of time. So I'm giving you some examples now. These are, just examples, but they're very close to real world or what we're seeing at Advanta. So the first one we're going to talk about is tax lien investing. So Dora takes a class on tax lien investing and wants to put her knowledge to use. She decides to start with her annual contribution. So we're all in this sort of stage for IRA accounts right now, all the way up until April 15th in most cases, to make your annual contribution for last year. So we get a lot of calls right now. How do I open the account? How do I fund it for last year? So we're dealing a lot with that. And for last year, 2023 contribution, if you're under the age of 50, $6,500 is what you can put in. But maybe you don't want to put that whole amount in, or maybe you're going to, max it out and put in the $6,500. But what can you do with it? So Dora decides she's going to invest in tax liens. Who does what? Dora opens her account with Advanta and funds it. She only makes a partial contribution of $3,500 for last year. Then she's going to submit our form, a purchase authorization form, letting us know that she is going to work with the county and make a deposit with them in order to purchase and bid on tax liens. And so she finds out what the county deposit is and lets us know. We have her fill out our forms for the county deposit, and she lets us know where to send that money. And then once that is done, we have we get the funding information, we have Dora approve it, and then money goes out of her IRA account. Once the auction is complete, at Dora's direction, Advanta will wire the remainder of the funds to complete the purchase of the liens awarded. So where does checkbook control come into play here? Well, a benefit to Dora for working directly with Advanta is we're familiar with these transactions. We're going to help her with those. She's going to direct us on a lot of the information, but we're going to let her know what we still need in case she isn't familiar. If she decided to go with checkbook control through an LLC, she's going to be working without us in that sense, but she would be able to fund very quickly once she finds out the balance owed for the liens that she won at the auction, which we would work Dora directly to make sure we reach that deadline as well. But you can see where Dora wiring the funds from her LLC is a little faster than coming to Advanta and working with us in order to get that final amount paid. So once the tax liens are established as an asset in the account and they're paid off, the county will send the proceeds to Advanta. She can keep track of the certificates paid off, and once they're all paid off, she'll alert Advanta that it has been paid in full, and will help her remove that as an asset from her account. An LLC or trust can be used, as we talked about, for ease of management in this type of investment, and it does save her on fees. And we already talked about the pros and cons, so I'm going to leave it at that. But if you have any questions, let me know. So cryptocurrencies, precious metals, foreign currency exchange. Obviously, these types of investments don't take a lot of funds in order to make them or get started in them. And I did have a question pop up. Are there any third-party agents that we can recommend for a guide to investing in tax liens in certain states? Potentially. We do have a webinar that we do usually twice a year with Chantel Owens, and she does a tax lien, tax deed boot camp. She is teaching specifically on the state of Georgia. But if you go to advantaira.com, or excuse me, you can find it on our video library too, but I think the easier way to find it is go to our YouTube channel. So go to YouTube, search Advanta IRA, and then look for our webinars with Chantel, because she does them usually twice a year, I think, with us. And she does outline different strategies. And then, like I said, she also offers a class as well. That is going to be specifically for the state of Georgia. I don't know of any for other states at this time. She happens to be near our office in Atlanta, so she partners with us on education every once in a while. So cryptocurrency, an IRA can invest in cryptocurrency as long as the platform or exchange allows the profile with them to be in the name of the IRA. And sometimes this can be a little bit tricky. There are a few exchanges that will allow it. But keeping in mind that cryptocurrency platforms are a little tricky because they don't like third-party wires. And so that's why we need to ask them the question, is it okay that the wire comes from Advanta IRA for benefit of your retirement account rather than a bank account held in your name? And that's very specific and something we have run into being an issue with cryptocurrency platforms. So we need to check with them. If you have a contact, I'm happy to reach out to make sure that they're going to accept the third-party wire and that their profile, your trading profile with them, will be in the name of the IRA. Now, if you have hot storage, that profile or wallet needs to be in the name of the retirement account. If you want to hold it as cold storage, we would recommend talking to an attorney to make sure this is within the rules, because we don't have clarification from the IRS at this point, and the only way to do that would be through an LLC or a trust. Now, further to that point, if you're using checkbook control, you might find it a little easier to find crypto exchanges that will allow you to hold your profile in the name of your LLC or trust versus in the name of the IRA. But we're always happy to talk to the platform and see if this is a possibility. Let me go back a little bit. So if you're going to invest in cryptocurrency and you find a platform that's going to hold the profile properly in the name, then we would just be working with them directly to help you make sure that that titling is correct. We move the money over to your profile with that platform in the name of the IRA, and now you have the ability to trade cryptocurrency and purchase. And again, if it's hot storage, the wallet needs to be in the name of the IRA. If it's cold storage, getting an attorney to work with you and advise you on that. Precious metals, that's something we do see a lot of in an IRA account. We're not talking about stock and precious metals here. We're actually talking about physically holding the gold and silver bars, coins, again, platinum, palladium, anything that's allowed within IRS rules. And the way that it works is that you're going to choose the investment provider. So you're going to choose the dealer. We don't put you with a dealer. You choose the dealer. You let them know that you're going to make the purchase in the name of the IRA. The purchase document is going to show the IRA making the investment. You choose the amount of gold, silver, whatever it is that you're going to buy. They outline it for us on a purchase form and send it over to us. We have you approve it, and then we send money out to the dealer. The purchase is made in the name of the IRA account. And then as the IRA holder, you choose the depository. We work with 8, so you have 8 to choose from. And then we help you open the storage account in the name of the IRA, and then the dealer is going to send the precious metals directly to the depository in the name of the IRA. And outside of Advanta's annual fee for precious metals, just keep in mind you are also going to have an annual storage fee. So I had a question about being the manager of the LLC versus the trustee of the trust. You can be the manager of your LLC. You can. That is allowed. It is permissible. There's a few court cases that sort of outline the IRS accepting the IRA holder as the manager, but you cannot be the trustee of a trust. So if you form a personal property trust for investment purposes, you must name in a non-disqualified third-party trustee to act as the trustee. I hope that helped. So futures trading, again, very similar to the way we see cryptocurrency, although we do not see as much pushback for trading platforms that we do on cryptocurrency. So cryptocurrency tends to be a little more difficult as far as the number of platforms that will allow the IRA to invest. I think that's very simply because cryptocurrency is something that we're really seeing kind of more new, and so the trading platforms are new as well. Even if they've been open, 15 years or so, they're just not familiar with the idea of a self-directed IRA, but futures trading has been around a long time, and I don't know, that's kind of my guess as to why you just don't see as many cryptocurrency platforms working with IRAs as you do see futures trading. But typically, futures trading platforms are very familiar with self-directed IRAs, so they're going to give you the information, and then we help you get the platform profile established in the name of the IRA. We send the money over to that platform, and then you're ready to trade. And again, that profile will be in the name of your retirement account. Any proceeds from that investment would come back to Advanta IRA when you're ready for it to come back. So case study 2, precious metals. Sam has funds building up in his self-directed IRA from dividends of an existing investment and decides he wants to go with precious metals to diversify the account. So Sam is going to find the dealer. Remember, this is an existing IRA. So he's going to find a dealer. He does his due diligence on that dealer and submit the purchase authorization form to us, and has the dealer send us a purchase form that outlines what he is purchasing and at what price. And then Sam is going to choose the depository and set up shipping through the dealer. We're going to get all of those forms from Sam. We're going to work to get the purchase done in the name of the IRA and the depository account established in the name of the IRA. And then we'll work with the dealer to pay for the precious metals, and the dealer will ship those directly to the depository. If Sam decides to sell precious metals, he'll find the dealer to sell the precious metals and alert Advanta so that we can work with the depository to release the precious metals to the buyer, and the proceeds from the sale go back to Advanta. So I want to point out here that we're talking very specifically about a depository being involved. You cannot hold your IRA gold at home. That is prohibited. And although I think we maybe didn't have clarification in the past, the IRS has a court case out there. It's only about 3 or 4 years old, where they clarify you absolutely cannot hold your precious metals at home. And so you want to be aware of that and work with a depository to hold those precious metals. So partnering, remember we talked about partnering. You cannot transact with people considered disqualified persons to your IRA account, but you can partner with whomever you like. So when I think about a partnership transaction, I like to picture a closing table. Many of us have purchased our own home, or we've been at a transaction table at some point in our lives. And if you could picture it, when you're doing a deal with somebody, partnering on a deal, you're typically sitting on the same side of the table. But if you're transacting, you're typically sitting across from each other, or at least that's the way I picture it in my mind. And so if you're partnering, that is allowed. So you're going into the investment that is new to you, new to your IRA, and new to the person that is disqualified that's partnering with you, all at the outset of the investment. So let's say, for example, that I was going to lend money and partner with my spouse's IRA account. Technically, we are disqualified from dealing with each other in a transaction. So that means I can't buy the loan from my husband. I can't buy an investment from his IRA, but we can partner together at the outset of this investment as long as it's new to both of us. And so that transaction, very simply, would be Advanta IRA for benefit of my IRA number 1234 as to a 20% undivided interest, and Advanta IRA for benefit of my spouse's IRA number 456 as to an 80% undivided interest. These percentages are not pulled out of the air. They are going to be based directly on the amount of funds from my IRA and the amount of funds from my spouse's IRA, no more and no less. And then the income received is going to be divided along that percentage as well. If you're dealing with a disqualified person, like in my example here, then you cannot change percentage of ownership for the life of the account between spouses, because that would be considered a transaction and prohibited. So if we go into a loan where I use $10,000 of my money and he uses $10,000 of his money, so now we're 50-50 in my new example, then I can't say, well, I want to buy him out of this loan. That would be considered prohibited. The only way to do it would be either to sell it to an non-disqualified third party, or have the borrower pay the money back and end the investment. Okay. The retirement account can partner with disqualified persons, as we discussed. The percentage of ownership is related directly to the amount of funds from each party. The partners could consider using a structure to ease record keeping. And this particularly might make sense if you're partnering IRA and non-IRA funds. So if you're bringing in, say, personal funds plus your IRA funds, or if you're investing with a friend who's not using IRA funds, using an LLC, a joint venture agreement, or real estate investment trust might be handy in order to ease some of the record keeping for that transaction. And I actually have a whole webinar on partnering IRA funds as well. So if you're interested, let me know and I can send you the link. So partnering basics, the ownership percentage is in direct correlation to the partner contributions toward the overall purchase. The investment is made, and if this is in the case of partnering two IRAs together, showing the undivided interest percentage for each IRA making the investment. All of the income and expenses must flow at that same ownership percentage at the time of the investment, and for income and expenses. So income and expenses are going to be divided along those lines. So here we're going to use a case study to show you kind of how that works. So Paul and Linda partner on real estate, and we're going to call Paul and Linda married just for the sake of considering that they would be considered disqualified persons. I see a lot of requests for different webinars. If you could send me an email, my contact information will be on the last slide here, and remind me which webinar you're looking for, and I'm happy to send you the link to those. So Paul and Linda partner on real estate. Paul has limited funds. They find a borrower and they'll lend out $50,000, and they'll have a first mortgage on the property. So who does what? Paul and Linda both established their IRA accounts with Advanta, and we helped them fund it. They found the borrower. They agree to the terms. I see I have a typo there. I apologize. Submit a purchase authorization form giving us the information we need to know so that we know who's involved in the transaction and where the money is coming from. and going to. We work with the closing agent to ensure proper titling. Again, that specific titling we talked about. And then we wire the funds. Loan payments come back to Advanta. The borrower, in this case, only needs to write one payment check because it comes to Advanta. And then as part of our record keeping duties, we'll split the payment to the IRAs based on percentage of ownership. And so let me go back here to this vesting. So if you can see on this slide here, we talk about Advanta IRA, FBO, John Smith IRA number 1234 as to a blank percent undivided interest. And in this example that I'm showing you here, Jane Doe is not using an IRA, but if she was, it would be Advanta IRA for benefit of Jane Doe IRA number 5678 as to a Y% undivided interest. And so that specific titling is going to be given to the attorney preparing the loan documents in this example so that it shows percentage of ownership. So if Paul had limited funds and Linda wanted to include him on the deal, let's say they were putting, again, in my scenario, they're married and so they're technically disqualified, but because they can partner, she says, well, let's take that 10,000 from this year and last year's contribution and let's put it to work. We'll put 40,000 from my IRA and we'll divide that percentage of ownership as partners in the deal. And then when we receive income for that investment, it would be divided based on their percentage of ownership. And I do see a few questions popped up here, so let me go back and review those. Give me just a second. Can I set up my LLC or does it have to be done through Advanta? Advanta actually does not set up LLCs or trusts or handle any legal documents. We don't prepare anything like that, and so you would work with your attorney, your accountant, or you could potentially do it yourself in setting up the LLC, but we are going to give you guidelines. It should be manager managed if it's an LLC. You could name yourself the manager or some third party. Again, consult with your attorney or your accountant on that. And essentially the member would be the IRA. So Advanta IRA for benefit of your name and your account number as the single member to that LLC, or if you're partnering, that undivided interest language that we showed a few slides ago. Do we refer any professionals for entities in partnering? Yes, we can definitely refer you. If you want to send me an email, I can definitely provide you with some professionals that can help you set up trusts and LLCs in order to do some partnering structures. How many entities can partner into a single investment? That's a great question. That's probably not one I can answer because I think at some point you do get involved in like SEC rules. And so that's probably not something I can answer. I would check with your attorney on up to how many, individuals can partner before, it might become like a syndication or an issue as far as, legal terminology is concerned. I'm just not as familiar with that side. So I would definitely defer to an attorney on that. Are there fees for receiving loan payments? There are not. Loan payments received are going to be deposited with no fees, with the exception of if your borrower is sending a wire. So there's an incoming wire fee of 15, but if they mail a check, if they use an ACH, there is no charge to deposit those. There's no charge for paying any expenses on behalf of an IRA either, as long as you do it through your portal. So you go into your online portal, request a check for payment to whatever that expense might be. So for example, property taxes, insurance, whatever, and we will send out the check at no charge. I had another question pop up. Partnering in case study 3 is private lending. Yes, it is. It is private lending. We're talking here about not purchasing real estate because remember we're talking about limited funds here. But you could still partner and invest with real estate even with limited funds. We've seen it done before, but in this example, we're talking about them lending money in the form of a first mortgage. So let me just go back to the scenario here. So Linda and Paul would like to partner their IRA to lend money. They find a borrower and lend out $50,000. And this slide is just talking about all the events we have on an ongoing basis. There are a lot. And so if you guys want to join us for any of our upcoming webinars, and we have so many great topics we're going to be covering in the next several months, including guest webinars, and we're going to be talking about a lot of different options as far as the IRA is concerned and different investments that you can make. And we have a lot of webinars behind us as well that are all archived to our YouTube channel, so I would encourage you to check those out. I had a lot of requests for different webinars, so I'm going to go over here to our next slide with my contact information. Please shoot me an email. Let me know which webinars you are interested in, and I'm happy to send them to you. A recording of this webinar will go out to you in the next day or so. Usually takes less than 24 hours. Our marketing team is usually right up, gets right on it, and they'll send out the recording. So if you are on the webinar, you're going to get the recording. Please feel free to share it. I would encourage you to do so. I'm happy to answer any questions that you have on a specific structure or strategy if you didn't want to ask the question here. I did have another question pop up. Is there a mortgage company that we can send out money and they can use it to lend? Is that okay to do? Yes. So the question really is asking about a professional, probably business that puts borrowers and lenders together. And yes, there are companies that do that. I probably do have a couple that I can refer you to, but keeping in mind to do your own due diligence on those companies. I just know our clients have used a few companies like mortgage broker type of situations for private money. If you email me and remind me, I will send you a few different companies that can do that for you when you have a chance. And I don't see any other questions, so I'm going to end the webinar at this time. But again, if you have questions, if you were looking for specific information, please feel free to email me. I am happy to get that information out to you. And I hope you guys will join us for our next webinar.